Ever bought a stock just because everyone on Twitter was screaming it was going to the moon, only to watch it crash back to Earth faster than your enthusiasm? That's herd mentality and FOMO, fear of missing out. And it's one of the fastest ways to turn your trading account into a cautionary tale. Picture this, it's 9:30 a.m., markets just opened, and your trading group chat is blowing up. Everyone's talking about a hot stock that's already up 15% in the first 5 minutes. The screenshots are flying, the rocket emojis are multiplying, and your brain is screaming, "Get in before it's too late." Welcome to the psychological trap known as herd mentality, where traders follow the crowd without stopping to think. Combine that with FOMO, the anxiety that you're missing out on profits, and you've got the perfect recipe for impulsive decisions. The problem is, markets don't reward late arrivals to the party. By the time you hear the hype, smart money might already be taking profits. But here's the twist. It's not just about greed, it's also about our wiring as humans. We're social creatures who evolved to stick with the group for survival. In the wild, following the herd kept you safe from predators. In trading, it might get you eaten by the market. In this episode, we're going to break down why herd mentality happens, the psychology behind the stampede, how FOMO hijacks your decision-making, the biggest pitfalls traders face when chasing the crowd, proven ways to break free so you trade with confidence, not panic. Before we continue, I want to thank the sponsor of today's video, Noesis. Noesis is a platform built specifically for traders who want to level up their consistency and mindset while avoiding mental pitfalls. It gives you tools like a daily mental check-in, a trade journal, and an emotion wheel to track your state while trading. On top of that, it includes structured playbooks, which are strategy checklists that you can go through before and after each trade, plus a Playbook marketplace where you can explore proven strategies from other traders or share your own. If you're serious about developing the psychological edge that most traders ignore, Noesis is worth checking out. You can get started today at noesis.zone. Link in the description. Let's dive in. Why we follow the herd. Herd mentality isn't just a trader thing. It's a human thing. Our brains are wired to seek safety in numbers. Thousands of years ago, if everyone in your tribe suddenly ran in one direction, you didn't stop to ask why. You ran too. The ones who didn't? They often became lunch. In modern markets, this ancient survival instinct works against us. When we see a crowd rushing into a trade, our brain interprets it as, "They must know something I don't." That triggers two mental shortcuts. Social proof. If lots of people are doing it, it must be right. Loss aversion. Missing out feels worse than losing, so we'd rather risk a bad trade than feel left behind. Example. Remember the 2021 GameStop frenzy? People were piling in not because they had read the company's financial statements, but because everyone online seemed to be money. Some early buyers made life-changing gains. Many late buyers? Not so much. The FOMO trigger. FOMO, fear of missing out, isn't subtle. It's that sinking, restless feeling when you see a stock already up 20% for the day and you're not in it. It's the urge to throw money at a crypto coin because the chart looks like a rocket. It's the creeping thought that every second you wait, you're watching piles of money slip through your fingers. FOMO has a very specific pattern. You see others making gains. Your mind starts running mental math on what you could have made. And before you know it, you're planning an entry based on excitement, not logic. The rational voice that normally says, "Check the fundamentals. What's the risk?" gets drowned out by, "Just get in before it's too late." Neurologically, FOMO hijacks your brain's reward system. It spikes dopamine, the same chemical triggered by gambling wins, and makes you crave action over analysis. That's why you'll see traders suddenly break every rule they've set for themselves, skipping research, ignoring stop losses, and entering trades in the middle of massive price spikes. The worst part? That feeling often hits right when the easy money is gone. The smart money, institutional investors and experienced traders, are often taking profits while the FOMO crowd is piling in. Think back to the 2017 crypto boom or the 2021 meme stock rallies. Many late buyers weren't entering because they saw a calculated opportunity. They were entering because they couldn't stand the idea of watching from the sidelines while everyone else got rich. But in markets, late entries driven by hype often lead to early exits driven by panic. FOMO turns your trading from a planned strategy into a reflexive chase. And the chase rarely ends well. Pitfalls of herd mentality. Trading. By the time you hear about a move, the big push may be over. You buy near the top, panic when it drops 5%, and sell, locking in a loss while early traders cash out. FOMO makes you abandon your strategy. You might buy assets you've never researched, trade outside your time frame, or risk way more than usual, all because you don't want to miss the next big thing. Herd mentality can push you into constant trades just to stay in the game, which racks up fees and drains mental energy. Imagine this. Apple shares recently climbed to around $260, a clearly strong level. Maybe there were headlines like "Apple never drops for long," and you, along with many others, jumped in. But then, over the next few months, the price slipped down to around $170, meaning you lost nearly a third of your investment. If you'd bought near $260 and sold near $170 out of panic, that emotional reaction, not what the fundamentals said, would have locked in a bad outcome. The lesson? It's not about hoping the stock always goes up. It's about having a plan and sticking to it, regardless of the noise. Breaking free from the crowd. When you feel the FOMO urge, pause. Literally step away from your trading screen. Give yourself a rule. You can't enter a trade until you've analyzed it on your own terms. Maybe it's Twitter hype. Maybe it's a friend bragging about a win. Identify what sets off your herd mentality and limit your exposure to it when markets get volatile. A plan sets your entry, exit, and risk before you even open a trade. That way, when the crowd stampedes, you're not just reacting emotionally, you're sticking to your process. Sounds strange, but sometimes the best trade is no trade. If something is already moving fast and you miss the start, accept it. There will always be another opportunity. The mindset shift. Here's the truth. In trading, following the herd often means you're late. The professionals are usually the ones creating the moves, not chasing them. To trade like a pro, you need to think independently, trust your analysis, and accept that you won't catch every single move. And that's okay. Develop the mindset that your goal is not to be in every winning trade, but to be in the right trades for you. Herd mentality and FOMO aren't just rookie mistakes. They're deeply rooted human instincts. The urge to follow the crowd is hardwired into us. But in trading, it often leads you straight into someone else's exit. By understanding why you feel that pull, you can spot the moment your emotions start steering the wheel. That's when you pause, breathe, and return to your plan. The best traders don't avoid FOMO because they never feel it. They avoid it because they recognize it early and refuse to act without a clear setup. The market isn't a one-time bus you have to catch. It's more like a train station with departures every day. Miss one? Another is coming. Your edge comes from patience, discipline, and analysis, not from joining a stampede just because everyone else is running. Next time you feel that rush, ask, am I acting on facts or feelings? If this episode made you rethink your last crowd trade, hit that like button. It lets us know these psychology deep dives are hitting the mark. I'd love to hear your biggest FOMO story in the comments. Was it a stock, crypto, or maybe a meme coin? Don't be shy. We've all been there, and sharing it might just help another trader avoid the same pitfall. And if you're new here, subscribe to KnowMarkets so you don't miss the rest of this Trading Psychology Pitfalls series. We've got episodes coming up on overconfidence, revenge trading, and even the dangerous comfort of analysis paralysis. Next time, we're taking on one of the sneakiest account killers, overconfidence. It feels good while it lasts, until the market humbles you fast. Remember, in trading, you don't have to be the fastest or the loudest, just the most prepared. Stay patient, think independently, and I'll see you in the next one.